Hello, traders. Gary Wagner here. 1:43 in Honolulu, currently 6:43 in New York on Tuesday, 8th day of February, 2022, and this is the Daily Report for gold and silver. In the last 3 days, we have seen gold score consecutive gains, with the most active April contract today gaining $5, 0.27%, and is currently fixed at $1,826.80. In fact, in the last 7 trading days since January 31st, gold has gained approximately $41, which results in a net gain of 2.29%. Gold's gain over the last 3 days have come concurrently with dollar gains 2 of those 3 days. Today, the U.S. dollar index gained just over 0.2% and is currently fixed at 95.60. Silver gained just over 0.5% today, a total of 12 cents, and currently March futures are fixed at $23.19. This first chart is a daily candlestick chart of gold futures. We can see that over the last 3 trading days, we have had consecutive gains. But what is most impressive is when we look at the action over the last 2 weeks. Since January 31st, we can see that gold has gained approximately $40 or 2.9%. As I said in our opening letter, this in light of pressure that has come from a more aggressive stance of the Federal Reserve and higher yields in U.S. Treasuries. But the real problem that we are facing right now is the current level of inflation and the balancing act that the Federal Reserve will try to perform to have an effect on reducing inflationary pressures without causing harm to the economic recovery that is currently at play. Not easy to accomplish. We have 3 moving averages on this chart: the 100-day in blue, the 50-day in green, and the 200-day moving average in red. It is not in perfect bullish alignment. For that to be the case, we would need to see the 50-day and the 100-day above the 200-day, which is currently on top. However, we have seen a convergence between the 50 and 200-day moving average, with the 50-day moving average currently hooking up to cross above that. That would form a golden cross. To be in full bullish alignment, we need to see not only the 50, but also the 100 cross above the 200-day to be in perfect bullish alignment. Nonetheless, we have seen this market gain value, and that is primarily due to real concerns about the level of inflation as reported in the PCE and CPI. The last CPI came out at 7%, the PCE at 5.8%, and traders are awaiting to hear what the numbers for January vis-a-vis the CPI, which will be released on Thursday. Currently, the forecast is that we will see an increase from 7% in December to 7.3% in January. The Federal Reserve will continue to walk a tightrope, a balancing act of sorts, to get inflation under control. However, increasing inflation will only make the diameter of the rope that they're trying to walk across thinner. In regards to our current trade, we went long Forex and April futures at $1,790. This morning, we sent out a trade alert to move your stops up to $1,790, assuring that we will not lose money on this trade. We will take a close look at current pricing as we get closer to Thursday to see if another adjustment is needed prior to the release of the CPI inflationary index report on Thursday. Over the last 3 trading days, we have seen significant gains in gold, and today's candle, which is just beginning to form, which is this one, is showing the potential to continue to indicate that the trend itself is strengthening. Lastly, as we spoke about in our opening letter, to have any real effect and bring down the current levels of inflation will be a multi-year process. And therefore, we are looking at a weekly chart with a multi-year projection. And simply put, what we did is we looked at an Elliott wave count, with the assumption that we began the third wave back in the middle of 2018. Gold was trading at $1,165 up to the record high at $2,088. That, of course, occurred in June of 2020, which was the beginning of a wave 4 correction, taking gold from 2,088 down to 1,665 at the first part of 2021. Based on that, all we did is a Fibonacci extension of wave 3, and the extension would be a 0.618% extension, which is where we are getting our current multi-year forecast from, and that is indicating that gold could trade as high as $2,200 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.